Good afternoon, everyone. This is Henry Gambell with simpleroptions.com, and in tonight's free video, I wanted to give you some of the stocks that I'm going to be looking at into earnings next week. So, a couple that come up here are Mondelez. This one is an interesting chart, and what I wanted to try to offer to you on this one is that when you look at the daily chart and you try to decide what to do around earnings, I think this daily chart alone is very difficult to make a decision off of, because when you look at it for the course of the past, not quite a year, but a pretty healthy duration, it is essentially traded sideways. So of course selling premium is the first way that I start thinking, but to help bring clarity to this trend, I like to step back to the weekly, and I think it is very much worth watching how these underlyings close in relationship to the 10-period simple moving average. So you can see we pulled back down into that this week. We have been able to find support here. I like using the 10 and 34. And another part of why I brought this chart to your attention is because we have a weekly and daily squeeze, which essentially just suggests that it has potential for a fairly healthy upside move. So when you have lack of decision on the daily, I think that weekly brings clarity to it. And the way that I would like to look to trade that is stepping out into, and obviously, this series will be expiring today and will no longer be there next week. But when you get into next week's review, I think it's going to be worth looking at to do something like initiate the short 45. Now, granted, you are selling that a little bit in the money, but when I try to think about which contracts should I be selling around earnings, one of the fastest ways to do that is change this layout drop down in Thinkorswim down into your intrinsic and extrinsic layout. And then all you're looking for is the contract that has the most extrinsic premium. Now, by selling them a little bit in the money, you are giving yourself a little bit more of a directional, in this case, a bullish bias. But I would sit here and tell you that essentially any of these three would be a decent spot to initiate that short put. Past the extrinsic value, the things you want to look for are those that have the best volume. So that is one of those tickers that I'll be looking at for a directional bias. And then another place to look at with a bit more of a neutral stance is Buffalo Wild Wings. Now, this is interesting because it came up towards the end of our chat today as we were walking through it in the chat room. And what I wanted to point out with you guys, I've taken a small position in it now, but we're going to look at actually trading it next Tuesday, is the idea that you can sit here and take the implied move or the suggested move off of earnings, which is right at $12, and tie that into technical support and resistance. Now, of course, that will not always work, but it's worth looking at when you're sitting at another chart that is, relatively sideways. If we compare that to the weekly, I see much less definition in this chart. So the trade that I think you want to set up around this, you can right-click on the 150 calls. Let's sell an iron condor. This is kind of a shortcut to get you to where you want to start setting this up. We will move the 145 put up to share the same strike as the 150. And I just think you can't beat the risk reward of this trade. Granted, it may not work, but you can see where I'm looking in relationship to technical support and resistance. You can also see that if you're able to get something like a $7.50 credit on it, that gives you a very nice break even in an otherwise range-bound chart. And I think that will be worth considering into next Tuesday. So, a couple examples of how to sell premium with direction, sell premium and being completely neutral, and hopefully that helps you as you address earnings next week. You'll have a great weekend, and I will touch base with you again on Monday.